Hello agents, today we're going to talk about one of our favorite subjects, taxes, and the basics of how to do them as a real estate agent. Now, I always have to caveat and say, we are not tax specialists or CPAs. However, we have a basic foundation of how to make sure we are staying compliant with taxes for the initial stages of our agent career and making sure that when we get that commission paycheck, we're adequately taking care of things so we can keep as much as possible and build wealth. So let's get into it today. We have a nice little board for us discussing agent tax withholding basics. Now, for this discussion, we're going to go over two major items. First is some basic ideas on how to withhold your taxes at the start. Next is how you actually withhold them and submit them to the IRS. It's a little different, especially if you're coming from a W-2 job. So first, looking over here at some simple withholding methods. First, we recommend at the start of your career, if you're starting out in real estate, make sure that you're putting aside 25 to 35% of your gross commission paycheck. Now, you're putting that aside specifically for taxes. That follows along with item number 2, putting it into a separate tax account. Now, this video couples very well with our basic to accounting video, where we go over 3 simple accounts that you should set up as an initial agent. That's having an income account, an operating expense account, and a tax account. Putting your taxes away separately, just make sure that it doesn't get spent on something random or unique, or you happen to accidentally take it as income and then all of a sudden you owe taxes when taxes are due. Putting it aside, make sure that it puts it in its own place. Now, lastly, we always recommend for withholding, simple withholding, is that you improve on it. As you learn, you improve. You're going to recognize that 25 to 35% of the gross commission paycheck may be too much. It may be too little. For example, if you get $5,000 in commission income in a month and you're putting aside 25, let's say 30% of that, that's going to be $1,500. But as you start learning, you're going to see, oh, well, with taxes, I technically only have to put taxes away for the amount I have after my operating expenses. It's also why we recommend having a separate operating expense account so you start accounting for it. So let's say you get used to things and realize, okay, I have $5,000 on average in gross commission income, but I typically have $1,000 a month in operating expenses and dues that I have to pay and marketing expenses and other fees and just expenses you have to running your own business. That really means that you need to look at withholding taxes on the $4,000 you have after expenses. So you just keep refining it as you go. We'll have other videos that help show how to start accounting for that along the way. But at a basic level, and for your first at least few months or a couple of years, considering 25 to 35% of your gross commission paycheck is a good place to start. Now, if you're on the lower end of that, might be because you're doing it on your own and there's no other income in your household. The higher end might be because if you have a spouse who makes really good income, that might bump you in a higher tax bracket automatically if you file your taxes jointly. So you need to account for that because you're in a higher tax bracket. That's why we usually say that range, and you can discuss that with us to feel out what might be the best spot for you. So now discussing those simple methods, we're going to look at how do we actually pay those taxes. If you're coming from a W-2 job, you might have been getting your paycheck and then noticing a little bit comes out for taxes each month, or a lot. Sometimes it always feels like a lot. But you go, hey, Evan, I only file my taxes once per year. That's correct. However, your past employer was taking out a little bit of taxes on each month, and then generally every quarter, they most likely were taking that and depositing it with the IRS for their estimated taxes to make sure they were staying compliant. Now, you as a small business owner, because that's what you are, Hearthstone's here to help you build your brand, to help protect you, take care of you moving forward, but you're now your own small business owner building your brand, your image to grow and build your own business, which means you have to also take care of your own taxes. Good news is it's relatively simple. There's 4 major dates you got to think of though. Now, rather than just filing all your taxes at one time in a year, you got to be aware that you now have to deposit quarterly taxes to the IRS. Those dates are April 15th, June 15th, September 15th, and back again around the next year by January 15th. Simple way to make that work. If you have a separate tax account where you're depositing your taxes from each commission paycheck, every quarter, that week prior, you look at how much you have in the account, you know your due date's coming up, you deposit out with the IRS. Then you know that along the way, as you collected your income, you were depositing taxes into that account. Now remember this too, if you happen to over deposit into your tax account, that's when you get back a refund. And you might have been familiar with that in past work, but what that means is you're overpaying the IRS, which means, hey, you might have given the IRS for an entire year extra money that they got to use, and you didn't get any use out of. So you then get it back a year later on your next tax return as a refund. Our goal is to try to limit that as much as possible. However, if you underpay, that's when you owe money to the IRS. So just remember at the end, when you file your main tax return, it starts to balance out. But you have to do these quarterly returns to start saving and building up for it. Now, how do you do that? The IRS has made it very simple. You can go to their website, irs.gov/payments. Search it in, make sure you're comfortable with the site, but you can go through it all and actually make your deposits right there online for your quarterly taxes. You'll select I want to pay my quarterly taxes. It might also state the comment 1040 ES. That's technically the form you're filing with the IRS when you're putting those taxes away. And it's very smooth and simple. It's how I've been doing them for years. It's just go right online and click right on through. Now, the deal is there, you'll also get a notification, like a confirmation for the pay. Recommend that you just save that so you remember how much you're putting away and document it. So at a basic level, that's our simple way of doing our taxes. So it's a little bit more complicated than when if you had a regular W-2 job before, and now you're having just sole 1099 income, but it's still relatively simple starting out. Again, as you get better, as you grow and learn more, this will adjust. One thing we also want to mention is that if you're working still a W-2 job and you're working as an agent and getting 1099 commission income, still got to account for this quarterly taxes based on your business income, on your real estate commission sales income. So we still got to account for that on top of your W-2 work. So that way you're not deficient at the end of the year when you file your taxes. So overall, hopefully this is a good introduction on the basics of agent tax withholding. Please feel free to ask any questions. And again, this couples very nicely with our basics to accounting for agents as well. Hope this helps. Take care. Bye-bye.